A ceasefire in Iran. Now what? What happens to oil? What happens to stocks? What happens to the economy here? Hello, friends. Welcome back to another video update. Now, as you know, I am not a political advisor. I'm a financial advisor, so I'm going to stay in my lane, but I can share some thoughts from a financial perspective on what is going on and the effect it may have. This is really what my clients are asking me anyway, so I want to share it with you. The big news of the day, a ceasefire in Iran. After more than 5 weeks of military action, the U.S. has hit the pause button and the markets are loving it. Let's break it down in simple terms for you. First off, a 2-week ceasefire. From an economic standpoint, both sides stand to gain from peace. Even as the U.S. is a net energy producer, we are not fully immune, as we found out, to rising oil prices. Americans are not loving the increase at the pump. But Iran's economy is much, much weaker. A disruption for them has a much bigger effect. Okay, so nobody knows the future, how this thing's going to end, but let me share an optimistic standpoint. Stay with me. Historically, ceasefires prove durable, even if there's no peace treaty. A textbook example is the Korean War. The war ended with a ceasefire in 1953. North Korea and South Korea never signed a peace treaty, but they aren't fighting. Likewise, the Gulf War ended when the U.S. declared a unilateral ceasefire in 1991. So what does this mean for the economy and the stock market here at home? Well, first off, the markets are throwing a little bit of a party. Stocks are up, oil is down, bond yields are actually reviving hopes for a Fed rate cut this year, which had kind of slipped away. So we'll see. But the S&P 500 just had its best day in nearly a year, with big gains in industrials, consumer goods, even technology, which has been really beat up lately. Internationally, stock gains were strongest in Asian markets, since they depend on Middle East energy, obviously. And Japan is up, not to mention Australia. All over Europe, stocks were up. I guess they're happy about cheaper oil too. Okay, let's talk about oil. The drop in oil today is Wednesday, April 8th, is the steepest decline, down 16.3%, excluding COVID that year, since 1991. So the second biggest drop since 1991. Big move. Now, gas prices are still higher than before the conflict, but this really is good news, let's be honest. If the ceasefire holds, and who knows if it will, we could see fuel costs ease up, and we're hoping for that as we go through the year. This is good news for your wallet. On the economic front, experts are sticking with their forecasts for growth in the U.S. Our chief economist has stayed with his target of 2.4% GDP growth for 2026. Yes, March saw gas prices hit $4 a gallon. We talked about that. But the impact on the consumer and their spending was really pretty small, less than about $100 per household on average for the month. So, inflation. Look for this month's CPI reading to come in hot. But this is a reminder why we focus on core inflation, because energy can be transitory. Now, the Fed historically looks past these energy-driven spikes, providing core inflation does remain stable. And today, Fed Chairman Powell released details from the March FOMC meeting and acknowledged that in light of the war with Iran, the Fed will need to remain nimble and rate cuts may be warranted. So they are kind of back on the table. Let me add this as a side note. We had a great jobs report in March. If you didn't see, U.S. jobs rebounded, adding about 178,000 new jobs. That was way above estimates. Honestly, we kind of knew that was coming. There was a rebound from a nursing strike. I believe it was nursing. But the unemployment rate dipped back down to 4.3%. So I love to see it. I love to see the numbers going in the right direction. Now, finally, back to the stock market. The S&P 500 is about 3% below its recent record highs. The recent pullback we saw, which was about 10%, 9% actually, 10% would be a correction, but very close. It actually eased some of our concerns about elevated valuations coming into this year and excessive investor optimism. I know, bad can be good. Very, very crazy. Um, Now we've also got earnings season kicking off next week, and we'll see if companies are riding the wave of solid fundamentals or if the energy surcharges, we'll call them, from the conflict will weigh them down. Here's the kicker. Our firm is still forecasting about a 10% increase in corporate earnings for 2026, which is a really good sign for the stock market. Historically, when earnings grow by double digits, the S&P 500 has gone up. We're talking 10 out of 11 years. I like those odds. We think economic and corporate fundamentals are on firm footing. So, fingers crossed, we might just end the year on a high note. Time will tell. Okay, bottom line. The ceasefire is a big deal for the economy and the markets, but we know this may not be the final chapter in this massive geopolitical event. Could be a lot more chapters for all I know. Keep an eye on oil prices, especially shipping traffic in the Persian Gulf, in the Strait of Hormuz. That's the big deal. For now, we're going to just enjoy the good vibes the market has given us for today and maybe a little bit cheaper gas. That's your, I guess, not so quick update for the night. Stay tuned and we will see you next time. Thank you for your time. Bye.